Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's March 9th. This will be our chart lesson for the day, and a pretty interesting day, with the exception of this big sell-off right here. We pretty much was status quo for this. It's about a 10-point range, and the upper side was fairly clear, lower side fairly clear. We did have this sell-off. The oil news came out around this time. Generally, it's not going to affect the ES a whole lot, but obviously something affected it with that today because look at that sell off. So you just got to be aware of whenever those critical news items come out. But this wasn't one where I'd normally say, hey, don't, be flat before that comes out. And so if you were still long here, you definitely had to exit where you were supposed to, or you would have gotten hurt on that one. So hopefully you were out by that point, and because we'd already touched the upper side. Of course, you didn't necessarily know this was going to be the upper part. There is a little bit of resistance right across there, but it could have been up here, and it could have been right in here. So this wasn't so clear at that point. So when we got the failed second entry long, that was the only place to enter there, and I marked that one green. You'll see it a little closer when I pull in, but uh, but let's back out here and we'll talk about the trades and go from there. This was a real obvious range, and the trends from top to bottom were not real hard to see. Um, you got a break here to new low. We ended up trying to push lower several times, and you can see we just couldn't get through that around 1982.50 or so area, and it continued to hold. And then this 1991. So it's really only about a 10-point range, but that's still enough room to get a trend from side to side. When I came in, we had this. We'd been working up. We had already had a break and a new high. We were starting to work down. Uh, this is a pretty good setup right here. Notice that we're coming down. There's a move up, and then there's another move down. Then we tried to go higher. This is basically the same thing as a failed second entry long. So let me move that out of the way. You can see there's a shorter term trend line of break and a new low, and then we kind of went sideways. We're kind of going sideways here, but there's a measured leg right here, and then another measured leg right there. And you can see that's a perfect measured move for the most part. If I get that right on, that's a perfect measured move from. So you're looking for, and remember the market moves in two, so you're looking for a second. I'm going to explain this one really well because several people asked me about yesterday. How do you know to go short when you've been working up? Well, first of all, you got your channel working up, and you got your break and your new high. So now you got to be careful about going long anymore without a really good setup. So you got two legs down, and the market moves in twos, and so you would expect a second entry long to trigger right here, and maybe come back to this trend line. You don't necessarily know where this trend line is yet. You can draw it off those bottom swings, and it gives you a pretty good idea, and you drag it up to the top, but it could be anywhere from there to there. But either way, it still fits right here. So when you get two legs down in the second entry, you don't want to go long right here because you've got all your pieces in place for a possible reversal. So unless you get a really good long, you don't want to go long there. And technically off this chart, it's a first entry, but I just showed you how you can see two legs down, a second entry, it fails. So that's a place you can go short. That's like a failed second entry long. So you could go short right there based on that trap. I didn't actually mark that one, but that's one you could take. I think you're better off waiting. And if it would have ticked higher here first, I would have liked it even better. But the fact that now you've got another one, notice how you can see those form. You should have had this trend line by now. If you just waited and drew it off those first three bars, then you get this one and it turns down. It's very negative. This is a huge bar, so if you wait for it to break below it, you got to drop a limit order back up here where it would have gone originally, one tick below this bar, and notice it would have come back and filled you, and it would have actually given you a couple of times to get filled and then head lower. But I'm okay entering here, and then when it broke below this bar, entering again with a limit order, trying to get in a little higher here, or maybe even just using a stop below that bar right there. So if you're already in, I don't know if I would add on to that one, but if you're not in, I like entering right there based on what I just described. It comes back again. It's a little breakout pullback short, but generally you need to wait on the second entry on those because these just fail too often. And notice you got a little some support across there, and and that's a bullish bar, so you can't go short below it anyway. But then when it turns up and tries to go long again, now you got a double test. It is the first break of this trend line, and you get a big bearish bar. So I like that one. There's not a whole lot of room here to get out. Really, your entry is below this bar, and there's a double top there. It's really, you got a new high and you pull back and you go first entry, pull back second entry. So you could really treat that almost like a failed second entry long as well. So I like going short right there. Um, Looking for prices to make a new low and maybe go down here and probably test these lows. And we actually end up testing those lows and coming on down and testing the next set of lows as well. Sometimes you'll get on down to these, but this, we couldn't get much lower than that one right there. That pretty much was the line in the sand. We actually did come and test the lower ones later on. You can see that, but we bounced out of there pretty quickly. So I like that short. And then we got a little trend working up. It looks like it's going to be a reversal. You get a second entry long right there, counting off the low, but everything's still pretty much below this EMA. And so I think you need to wait on this one. And you actually get a second entry short, and it runs on down, makes another new low. This one is, you definitely don't want to go short right there. This is actually, and you could actually treat this as a failed second entry long. Notice there's a new high, pullback first entry, pullback second entry. And then that's a big bearish bar. That's a double top, so you could treat it like a new high, and this being a first entry and that being a second entry, but you're going short right into a lot of those stems. But when it double tested again, it's very similar to this setup over here, and then it turns down and goes lower. And so I like that double test rule of really coming back and testing the EMA over again. And somebody else asked me this morning, they were wondering why they shouldn't be going long right here because prices are now above the EMA. You got to understand that this EMA is like a trend line, and you're going to get a break or two of it the first couple of times before it finally reverses and goes the other way generally. It doesn't, just because you're above, and here's a good example, just because you're above the EMA don't mean you go long here, because look what happens. You got to take it into context and look at the big picture and realize that, hey, we're trending lower here, and even though we pushed through the EMA there, it still doesn't mean we're necessarily going long. So even though you're going to use the EMA to help you, if you're above it, you don't just go long and below it, you go short. So that trader was really confused on that based on what he told me. So just want to make sure that's clear. But now look what you got. You got a break and two legs down to a new low. And that's generally going to lead to a correction or maybe even a reversal. And you can see that one leg, and then you get another leg here. And it's pretty close to being a measured leg. It didn't quite get that last tick, but that's because that strong support is right in there. And you can see that. But that's close enough to be two legs down. And then you get a bounce here. And you're moving up again. It looks very similar to this move up. You really don't get a convincing close outside to here. And that is a second entry short, but you don't want to be going short now because you got all your stuff in place to be going long. So I'm thinking long, and you may get this could be a shorter term, and you may get a bigger pattern like over here. So I like this for a long because you got the failed second entry short when everybody's still thinking short. That's a quick, easy move, and then it turns back down. I don't really see there's a double top here and maybe a lot of resistance across here, but I don't see a setup I like to go short right there. So you just kind of got to watch that one. And of course, what does it do? It's trying to go lower, but it's bouncing along this support, so it just kind of goes sideways. And so now we're kind of sideways, and this is a little trading range, and you get a failed break higher. But again, and you might have considered this short actually. It probably should be green because notice that new low. There's a pullback first entry, pullback second entry. It's also a failed break out of that congestion area. It went higher, then turned and went out the other side. There's several reasons. I mean, that one to consider that one if you want to be aggressive. It fits the criteria, so I'm going to make it green. And then, of course, what does it bounce again? It bounces right here. And this was a double test of that, so you could have even considered going long right there, but it's not a perfect bar, so I think you're better off to wait. And notice what happens. You got a new high here. You pull back first entry, pull back. There's a second entry long right there. And you know, and you should understand why prices are bouncing across here because there's a strong support area across there. So the odds are we're probably going to come back up and test this high and maybe even this high, and we could go high all the way back up again if it's going to be a range day. So if you want to be aggressive, I like that one. It's stacked up pretty high there. If it would have broke lower and turned up and it wasn't so many bars stacked up, I'd probably make that one red. There is a trend line kind of working up there, but it's not real clear until it gets this bounce off of it. So I'm going to leave that one green. And of course, now we take off, we pull back, and we get a bounce right off that trend line. This is a first entry, but it's also a breakout pullback long. That's another reason I like it. It really confirms this trend line. You got a couple of touches here and then a third touch. It's not a perfect signal bar, but it's also a failed second entry short. Notice that you got a new low and you're pulling up. You got a first entry and you go up. You got a second entry, and it bounces and it's right off the EMA. This is that reversal type pattern before you go higher. And then the first thing I would do once we started up here, so you're going to measure that leg. Remember, the market moves in twos. And there's your second leg. Again, it's almost a perfect measured move. It just can't get above that resistance right there. But I mean, that's so close. It's within a tick of being a perfect measured move. And the only thing is we don't really have a break of this trend line yet. So you got to be careful about getting short. But it's looking like the bigger pattern is going to be a possible trading range. It's real clear on the bottom, but it's not real clear on the top yet. It's somewhere between. Notice you get a lot of turn down here and you get that little push up, and so your resistance is probably right in here somewhere. And so when you make this high, you draw your line right across that and those other ones, and that turns out to be it pretty much the remainder of the day, but you don't know that at the time. So you got to be careful about getting short, but you also got to be careful about getting long right here. And I think somebody sent me an email and they got trapped long here. But notice what happens. You're not back to the key entry point. You're not back to the EMA. You're not back to the trend line. You're kind of going sideways. The bars are all stacked up. You got resistance just above. So you got to be careful about getting long. If you did get long there, when it starts going sideways, I would have exited that with a tick or a minus, maybe just get out of that with what you can. Because if it breaks lower, you're probably in trouble because you've probably been trapped. And so when it went higher, so you're not really looking for a long or a short, but when it goes higher and you know you got people trapped and you're not even back to the EMA yet, I like that one for an aggressive setup just because it's probably going to be a trap. And you see what you would have got out of this. You could have ridden this. I mean, this thing, it takes a minute to get going, but it rockets out there and the bottom falls out of it. And so the reason I started the trend line here is because the downtrend doesn't really start to here. And you can see how prices fit in there real neatly. And there's just no other way to get in that one. You don't want to try to buy a falling knife here because it's going to bounce at some point. And if you didn't get in up here, you just got to watch that one go. And it pushes right on through. And that's your first break. And so it's tempting to want to go short right there, but you just don't have enough room. It would have worked, but notice what happens. It closes, makes that double bottom, and too many times it'll bounce there. Look how far away from the EMA we are. We got to be careful about entering like that. So it makes a new low. You get a break, a move to a new low, and then it makes that higher low. It breaks lower and turns and goes up. I like going long, just trying to ride it back at least to the EMA. Plus, we should come back and test this breakout area. And we actually push right on through the EMA, and you get your failed second entry short. You confirm your trend line. You get your reversal pattern. I like going long right there. Those are usually, generally, if you can catch these, a lot of times you can ride them all the way. This one came back and probably got your break-even stops. But this is like a little breakout pullback, and it bounces right off that trend line again. It's a little small inside bar, and I like it because we're coming off that trend line and we're probably heading to the other side of the range now. This one's real close to being green, but I still like it for the reason I just discussed. And then notice what happens again. It pulls back, it tests that trend line, and look at that bar right there. I would probably consider letting this break higher and trying to get a better entry. And you might have got a tick or two back in that, but it's took off pretty fast. And it's obvious now what's probably going on. We're at least heading back up to, trying to head back up to here. Notice how we never really tested this breakout area real good, so we're probably heading there. And this thing just keeps going, so we're probably headed back to test this high. And if we got a range day, we'll turn back down the other way, and we could just keep going higher. A lot of times these failed breaks are the low of the day, and you just keep going higher. But this is a range day, so look what happens. You get up here and you pull back, and you got this trend channel working down. So that's your first break. You get a second entry, but look at it. It's not a real good bar. You got a little resistance across here, a double top really, and it turns up. And you really get a failed second entry long there that's almost a repeat pattern. So for that reason, you could even go short right there. It would have worked. Probably should circle that one, just because it's a repeat pattern and it's a failed second entry long. But I'd be more thinking, because we're going so much sideways here, when it breaks lower and you get that bullish bar, I like it back to retest the top, because that's the first break. And this is a pretty strong trend working up. You're probably going to retest that high, and you're probably going to get a new high based on the rules. It's always possible that it closes and turns down right here because of the trading range is probably the bigger pattern. But this is just a strong move up, and generally on these strong moves, you're going to get a retest of that level. So you got to be very leery of this thing bouncing and testing this high again, and that's exactly what happens. And the only reason I like this one is because of the failed break lower and the fact that it's somewhat of a trap. You can see that, and it breaks lower and it instantly turns and goes up. Just go long there. Again, you might let it break higher and try to get a tick or two back in there just to get a little better entry, but there's still plenty of room before you get here. And this is a fairly easy move. You don't want to take this little pullback and entry, because now you're right into that high. Definitely not enough room. Even though it probably would have worked, you're better off not to risk that. And guess what? It makes this little matching bar, double matching bar high, and it breaks one tick higher and instantly turns and goes out the other side. You're a good bit away from the EMA. And the main thing is you're at the top of the range, so you're looking for a possible reversal. You're way away from the EMA, so we're probably going to snap back. You've already played out your trend coming up. You got the break, move to a new high. So you got all these reasons to think about maybe entering here. Generally, I'd say wait on the second entry, a lower high or second entry, or double top second entry or something. But you're so far away from the EMA, I like this one. And it went out the top first and came back out the second, and it's a second entry. Notice that new low, pull back first entry, pull back second entry. That's pretty much two measured legs up. You're probably going to be able to get out before you get back to the EMA, even if it bounces. So that's why I like that one. And this is a range day, so this is a key entry level across here. And then guess what? You get that same pattern again here and here. You try to go higher once, you try to go higher twice, it fails. So I like that one for the short. And if you catch this one, you can ride this one all the way back down. And I would look to probably, especially when you start going sideways down here, I'd look to exit just above this. And notice that's your first break. You get a couple of moves down to a new low, and then you bounce. There's a breakout pullback short here, but your bar's not bearish enough. This bar is too big. And now I don't think you want to enter this close to these lows right in here. It's too risky. You do get this low and then a higher low and a reversal, but you're right back into that EMA, and there's some resistance right across there. So I think you're better off to skip this one. You can see that resistance across there, and wait on the reversal pattern, the failed second entry short that turns that. And notice what happens. You get that here. You push through the EMA, you pull back right at the trend line, and you get that failed second entry short. Notice that new low, pull back first entry, pull back second entry. Look how bearish that bar is too. You're going to fool a lot of people on that. They don't realize what happens on a range day. Now you've come off the low, you're probably headed to the highs. And look at that move. That's a nice move up. It's almost, that's that perfect setup pattern we're looking for. And there's other reasons to enter there. Breakout, pullback, long, the reversal pattern, the failed second entry short, all that stuff. The bounce right at the trend line. It actually pulls back and bounces off the trend line again, but it's not a bad signal bar, but it's right into that 2-bar matching high. You've had a retest of this breakout area now, so it could turn back down. But it ends up going higher and testing this breakout area before it heads back down. And at this point, you're really expecting prices to go up to here. So notice what happens. You get your failed second entry short. Or no, you get your second entry long. Look at the new high, pull back first entry, pull back second entry. It's right at the EMA, right at the key entry point. We just had our first real close outside this channel, and we're expecting prices to probably go up here. So this is a good long. That's all it's good for, because then it turns down, and when it turns back down here, now you could treat it like a failed second entry long. And so I like it back to test the other side. Down here. This one's a little bit. The main reason I like it is because it's the failed second entry long, even though this would have been enough to get out the scalp right there. You can still treat it like that. And notice the little matching lows right across there. It's a little breakout pullback short, and it pretty much sets that trend line. So when you come back, you actually could have considered entering right here. It's so close to 2 o'clock, and it's a first entry that I probably would skip it, but I like entering that one just because it's the trap. But you got to understand what's going on in order to understand why you would want to go short or long there. And that's what some people, they miss that point. They don't. This chart's telling you something. It speaks a language. And if you don't understand that language, this is all gibberish here. It's just, hey, there's no rhyme or reason to what prices are doing. When people tell you that the market's random and that there's no rhyme or reason, don't believe it, because that's not true. Market geometry is very real. Price action does speak a language. You may not know where prices are going to be tomorrow by reading this chart, but I can tell you, by reading this chart, you got a good idea where prices are going to be from right here in the next 15 or 20 minutes. The odds are they're heading back up here. And where do they go? They go straight up there. Of course, I knew that, but I could have told you that this afternoon, because I know what happens in a range. Prices undulate from one side to the next. And especially when they test it multiple times like this and fail, then they're headed to the other side, and they're going to test it up there. This had more of a down flavor today, but when you're swinging, going back and forth both sides of the EMA, you can trade it both ways. Stick with your shorter term trends and follow the rules just like you would if it was a bigger trend line. So you got to understand all that, and it takes a long time to understand that. But I got an email from a gentleman, he'll probably be watching the video, and this is not to beat up on him, But, he questioned every one of the trades I marked yesterday. He had a reason for why you shouldn't take them. And my advice to him is don't waste your time trying to point out why you think I picked the trades I marked are wrong. You should be trying to figure out why they're the right trades and trying to understand that and learn it. And I mean, I'm not going to mark the trades wrong in the video. There's no reason to do that. I'm marking the trades based on what the price action is telling us, following the rules for the most part. So, if you don't understand what this stuff that I explained to you today, study this chart and this video until you do understand it. That's how you get better. Not by questioning every trade that I've marked on here and trying to say that you think it's something else. So again, that's not to beat up on that trader. It's just to try to help him get better. And I had a couple other things I want to share with you, a couple of emails, and then I'm going to wrap today up. Let me find one of these emails here. Okay, I wanted to share this one with you. A gentleman sent me this one. And the reason I like this one is a lot of times these emails will speak to me. It'll remind me of how I got to where I'm at today. And his really reminded me because I started very similar as him. I was trading some of the grains, trading the daily charts, and trading, I traded some cattle and some, I traded all of them really. So I've traded all of them at one time or another, but mostly I was trading the dailies at that point. But I wanted to read his email because it resonated with me. And it sounded so familiar. But he said, just want to say thanks for your course. I've been trading the daily charts for grains and soft for about 20 years with limited success, but I'm still here, so that's better than most. I always thought that the shorter time frames were for gamblers. After going through your material for a week, I've spent the past 7 trading days marking charts in real time as I can at work, and then after I get home if needed before watching your video, and then matching them up to your daily updates. And that's what you have to do. Exactly what he just said there. That's how you get better at this. Sitting here trading all day and then questioning the trades at the end of the day is going to get you zilch. Sitting here trading all day and then packing up and going home at the end of the day is going to get you zilch. The way you get better is sit here trading all day and watching it and studying your charts and then going home at the end of the day and studying what happened. Figure out why the trades that worked. Figure out where all the big moves came from and how you got to those big moves. That's how I figured out the key entry points for the most part, because I'd say, why did this big move originate here? You got a trend working up and suddenly it's rocketing the other way. Well, maybe a news item caused it, who knows, but it doesn't matter. The news, they write the news to fit the price action, so it does not matter. What turned prices down here is a key entry point, this resistance across here. Why did prices suddenly bounce right here and rocket up? Because the trend has changed to the upside. We just came off the low, and now we've pulled back to a key entry point, which is not only a trend line, there's an EMA in there too. When you get them both, it doubles the value of that. It's 2 reasons, and look how it rocketed off. Anywhere you look, where did all the big moves, where did this big move originate? The EMA and the trend line. Where did this one originate? This big move up here, the EMA and the trend line. Where did this big move down originate? Right off that key entry point, the resistance area. Where did this big move right here originate? Off the key entry point of the resistance area. Where did this big move originate? A failed break below a key entry point. Same thing as bouncing off of it. It's even stronger when it breaks lower and fails because it traps people on the wrong side. Where did this big move right here originate from? Coming off this key entry point of the lows down here. Look at this one. It comes right off that trend line in the EMA. Look at this one, right off that key entry point support. And that's how you discover this stuff, by studying your charts and saying, why did that happen there, until you figure it out and you know why. There's always a reason. Prices don't just do it. There's a reason, and you have to learn those reasons. But anyway, back to his email. I'm sorry, a tangent, but this is important stuff, so I want to make sure people get it. But he goes on to say, the last 2 days I could almost have done your videos for you, it seems. So see, he's getting it. He's by studying his chart every day, he's getting it. It's kind of funny that I've gotten more setups in the past 7. Now listen to this. This is really good. It's kind of funny that I've gotten more setups in the past 7 trading days than I think I've had in the last 10 years of soybean trades. He's getting it by studying his charts, doing exactly what I try to tell people to do that don't want to listen, that want to try to figure it out on their own. If you just, it's not rocket science. There's no magical formula. There's no holy grail. This price chart right here in front of you, it's telling you something. And if you know what to look for and how to understand what it's telling you, you can find these trades. Does it take a long time? You bet you it does. And mostly because most of the people I like to deal with that learn this the quickest are the people that have no past experience. They hadn't been reading all the bunk on the forums. They hadn't been reading trading books that are written by very important people that are considered very real stuff that's bunk. It's all, I get so frustrated when I think about it, and you will never understand what I'm saying until you get there. When you can read this chart, you will go back and you say, I know exactly what he meant now, that this is just bunk. Don't forget all that stuff. There's nobody posting on forums that knows what they're talking about, because if they know what they're talking about, they're busy trading, and nobody on the forum is going to believe them because the real stuff doesn't conform to the widely accepted stuff that's all wrong. So I don't know any way other to put that, but you won't ever get it until you get there for the most part. But you take somebody new that's never read all that junk and read all these books, they come in here and they start studying this stuff, and in 6 months they got it down. It happens quite a bit. But it's the ones that have come in here and say, I've been trading this guy. That's why I really like this gentleman's email that I'm reading, is because he's been doing this for 20 years, but yet the light still went off for him. And most people that have been doing it for 20 years, the lights never, it takes the light much longer to go off. So, but anyway, I'm going to continue his email. Looking back, I've had the exact wrong thinking. Well, there you go. Just what I was trying to tell you. With the dailies, there are so many reports and news events every week that can instantly change the course of the market before the market gives you a decent profit and hits you with a sizable loss. Where this scalping runner strategy, you avoid all that. The dailies is where the gamble really is, looking at things now. The one positive thing about having been a dailies trader for so long is it's so easy for me to enter a trade and risk just $100 a contract after being used to $400 to $600 stops, as well as being caught on the wrong side of limit moves in the past. And so really what he's been able to do by spending 20 years in the dailies is he's conditioned himself mentally for the big, the excitement and the bigger stops. So this is like going to the simulator for him, almost trading live. And so I get that, and that's why he's that way. It goes on to say the pace of your time frame also fits me very well. Sometimes with the dailies, I get so bored waiting for a good setup, sometimes for weeks, and that's true. Sometimes you have to wait for weeks on a daily to get a good setup. And I end up taking trades I shouldn't, but there's that mental thing coming back in. You sit there, you get bored, and you're not patient. Next thing you know, you force yourself into a bad trade. Past few mornings, I've taken some quick trade setups before work in the pound and euro before, and I'm close to perfect on those. Just being brand new to those markets, I had my stops just a bit close on the one loser. But it was more to see the patterns working intraday than it was about trying to make $50 on the trades. Now I just want to plan a week off to stay home and see how I do full time for a week. But anyway, that was his email. Very good email, and it just fits. It resonated with me, so I wanted to read it. And then there's one more. I'm going to pause it just a second. I really hate for this video to get so long, but I got this email from another trader today. It says, Mack, I'm wondering what you would do in my situation. Today I completely lost my wits, put on 5 consecutive counter trend trades into the rally after the initial oil inventory selling. I was picking tops 5 times in a row and even expanded my stop on the last trade. Needless to say, I got taken out by a tick on the last trade before it reversed. I'm quite shocked at my behavior, and I'm too embarrassed to really tell anybody about it. Do I go back to square one and only take with trend second entries for a while maybe? Have you done stupid stuff like this in your trading days? Would like to hear your take on this. Thanks. And he puts his name down. I'm not going to say his name, but yeah, I did the same things early on. And I guarantee you, there's several dozen people watching this video that have all done the same things. Probably everybody watching it, if they've traded for any point, have done the same exact thing. And that's the middle part coming in there to play that, again. But anytime you have a bad trade, don't try to. The best thing to do, get up. If it's only 15 minutes, get up, walk away, gather your wits about you. Just take a break for a minute. Make a phone call. Walk outside. Go get you a snack or a soft drink or a glass of water, whatever it is you drink or whatever it is you do on your breaks. Take a little 15 or 20-minute break. Come back and sit down, and you'll be amazed at how clear everything will look again. But when you're trading and you're flustered, it's like it all scrambles again for you. And over time, you can work through that. But that's training that you have to you have to be patient. Sometimes you just have to, just like watching this trade, just like really there's not a good trade from here to here. And so you might have to watch all that move. And that's hard. When you see that thing rocketing down like that and it's going without you and you're saying, man, I missed that huge move, and then it pulls back and you get a chance to enter and you enter and it goes a tick or two and then reverses. And next thing you know, you're saying, what the heck? It was just falling like a knife and now it's going back just as fast. That's what happens when you let yourself get flustered and talked into a trade rather than just being patient and sometimes realizing that there's good moves sometimes that happen and there's no way for you to get in them. If you followed the rules and this thing moved without you all this way, you still did the right thing, because most of the time you're not going to get in and be able to get any of this. It's going to go completely without you, and as soon as you jump in, it's going to reverse and stop you out. So don't let yourself get flustered. Get up, walk away. If you come back and you're still flustered or you have another loser, I'd quit for the day. If you're sim trading, by all means, keep going. You still might get up and take a break and come back and look at it, but you got to get all the screen time you can get when you're sim trading. So these rules, some of these things I say don't necessarily apply unless you're trading real money. Because you got to get all the screen time and all the experience watching prices move you can. And you can't do that by taking your 1 or 2 or 3 trades a day and then walking away. If you can sit here and trade 5 hours a day, you need to sit here and trade as many of those 5 hours a day as you can, because that's the only way you get the experience of watching prices do what they do every day. So make sure you understand that. But this thing's almost 40 minutes. But this was good stuff. I wanted to share it with you. But I'm going to wrap it up for today. We'll be back again to do it tomorrow and wrap up our week. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.